Hope you all had a good weekend. Here we go then, 10th of October. Fresh week in the saddle. Let's talk about the various kind of macro themes that are dominating. What I will say, just before we get into the meat of it, let's just remind you that it is a US bank holiday today. So it is, which one is it? Columbus Day? It's Columbus Day. So just bear that in mind from a volume and a sort of price action point of view. It's also the Monday after non-farm payrolls, which, I don't know, feels a bit like a weird Monday after non-farm payrolls. Normally it's a pretty hungover affair where volume's really low anyway. Add in the bank holiday and ordinarily it would be an absolute write-off a day like this. It's just that actually, even though payrolls did happen, it was absolutely, in fact, not even close to being the most interesting event of the week last week, which is incredibly unusual, of course. So we'll obviously talk sterling, we'll talk Trump, and we'll have to have a little look at Deutsche, because that's a little concerning this morning. Deutsche opening 2% lower, so we'll have a look at that. You know, it's been a few sessions now since Deutsche's been the kind of driving force. So we will have a look at Deutsche. I'm just showing you on my DAX chart, and just be aware of this. I'm just showing you this kind of 1 hour chart looking back over the last couple of weeks actually, and certainly movement in both directions being quite heavily influenced by Deutsche. First the sell-off in Deutsche and then the big rebound. So just be aware, we're just testing this Friday low right now on the DAX, and with Deutsche under pressure, I've got some downside bias, let's put it that way. So let's just quickly catch up on events over the weekend, and you of course can't have kind of failed to be embroiled in this kind of crazy circus sort of, it's just extraordinary what's happening with this US election. And Donald, I mean, I don't know, words kind of fail me when it comes to try and describe this. What it is embarrassing, to be quite honest, from a America's point of view. This is embarrassing. Like internationally, you're looking from afar on what's supposed to be the leader of the free world, and you get these two candidates who are supposed to be the best candidates to run that country. I mean, it's a little bit shameful. And the first part of that debate last night, where obviously Trump, really it was his final, I mean it was his absolutely his last leg after the disaster of a weekend, and somehow it looks like he's come out swinging, and it looks like he has just about stayed alive, which is quite remarkable given the carnage that hit his campaign on when was it, Friday night. So if you look at the polls, and it's very difficult when you're looking at trying to judge who won that debate last night and what's the polling, who's leading overall, and there's so many different polls. Obviously, there's so many different angles. It does appear like Trump, at least didn't lose that debate, and I would say did a lot better, or fared a lot better this time than he did a week ago, and he needed to, otherwise he was dead. So he definitely came out swinging. Big focus on Bill Clinton. That's his tactic for, taking the spotlight off his derogatory comments towards women. It's spinning it and piling it back on Bill Clinton, as if that makes his behavior okay. But it works when you're up against, if it was any other candidate, I mean, Trump would be gone, I think. But it's just the fact that Trump, who's the officially the least popular presidential candidate in history, luckily for him, he's actually up against the second least popular presidential candidate in history. So if it wasn't for that, he'd be long gone. But obviously Hillary's got a lot of problems of her own. But look, it looks like Trump's alive somehow, and he just about won the debate, I would say, last night, or as I said a minute ago. Certainly did a lot better than he did last time. Just thinking about some of these polls. Just going to switch my screenshot across. Hang on a second. Let me just do that. So just thinking about polls and stuff. What we'll do, we'll look at this map later on, actually, in terms of the state map and how things are going. Ohio is a big swing state. It does look like, having over the weekend, what's happened is it looks like Clinton has just edged the lead in Ohio. Trump had been leading there. Looks like, and I think this is net the most important thing of the weekend, is that Hillary looks like she's edged ahead in Ohio. Remember, that's the state where no Republican has ever won the White House without winning Ohio, and only one Democratic president in history has ever won the White House without winning Ohio, and that was someone you might have heard of, a guy called JFK. Now, Ohio's key, and so Hillary's edged ahead. I think over the weekend what's happened is big swing in Hillary's favour because of this video release of Trump's behaviour. Then that big jump towards Hillary has just been given, some of it's been given back a little bit after that debate last night. That's the best way to sum it up. If you're looking at the actual polls, well then the CNN ORC poll has Clinton at 57% and has Trump at 34%. Before the debate, Clinton was at 62%. So as I said, Clinton's lead has increased over the weekend, but that increase just edged back slightly after that debate last night. The third and final debate is next weekend. I think it's this coming Sunday. And so who knows? I mean, apparently the Democrats have got more in the locker when it comes to rolling out some archive footage of Trump behavior. This is the rumor, and it wouldn't surprise me, and I think they've timed it well, because basically they've timed the onslaught so that it's too late for Trump to pull out. It's too late for the Republicans to get rid of him, so they're going to ratchet it up, and I wouldn't be surprised if we get some choice piece of footage from the past every single week now until the election to undermine Trump's campaign, and that one over the weekend. I mean, how is he still? I mean, well, how? That's all I'm going to say. Embarrassing. Now, from a market reaction point of view, let's swing it back to the charts here. What's happened? And actually, let's just get the Mexican peso on one of these charts. MX6 is the code for the Mexican peso, because this is what's happened overnight. Let me just change a few lines here, so I just get rid of that. What's happened overnight is we've had a gap higher. So as we start the week, the Mexican peso has gained in value, and this is more to do, of course, with the fact that the video of Trump was released after market close, so it was over the weekend. You might have said that if it wasn't for the debate last night, the Mexican peso would be even higher. But certainly the Mexican peso's up. The Canadian dollar is up. These are indicators to show that Hillary has gained a little bit of momentum. And here we are on a daily chart. Let's put it on a weekly chart for the peso, because you can see what's happened here. What's happened is that the peso has been under a huge amount of pressure. I mean, this is looking back over the last 12 months and more, actually. But we made a new low on this market as Trump was gathering momentum, as you know, we kind of went through September, and we really started to see Trump gain momentum. That's been reversed, of course, over the last couple of weeks, and especially over the weekend. So Mexican peso up to the highest we've been, well, certainly the highest we've been in October. Equities open slightly higher, but you can see the S&P on my right-hand chart here is just about to test the low. Okay, so we started the week with Hillary slightly better off, but soured slightly by the fact that Trump came back fighting last night. Now we've got Deutsche in the mix. Let's switch my chart my screenshot, have a look at the Deutsche share price. Deutsche's just trading down at 11.70 here. So a gap open at the this morning. We were chopping around, well, just on Friday's session, 12 euros was a really good support area for Deutsche Bank shares. That's been broken, and so we're back down to price points we saw in the middle of last week. Of course, 10 euros is key. That was the low that we had the week before, or was it the Monday of last week? Now, what's happening here? We had a sort of international finance conference, the IIF annual conference, which is basically where you get all the big guns, and here are two of them. Who's the guy on the left, actually, without reading the caption? Who's the guy on the left? Let's test your knowledge. That's the easy one. You should be able to recognize the guy on the left. Type in the room. And the guy on the right, you may not recognize, but if you can read, then you'll be able to tell who it is. It's a guy called James Gorman. He's Morgan Stanley's chief. But you got all the other big guns from Wall Street. And basically, the kind of takeaway from this conference over the weekend, it was talking about Brexit, as this headline suggests. And certainly, Jamie Dimon was incredibly involved, actually, in the Remain camp's campaign. In fact, he came over and did a lot of work over here to try and support the Remain camp before the vote. But he was saying, he kind of reiterated that they are looking at potentially shifting staff away from the UK. He said before the vote that if we did have a Brexit scenario, perhaps a quarter of JP Morgan's UK-based staff would be relocated outside of the UK. What Gorman was saying, which I think was perhaps most interesting, he was saying, actually, well, if we want to shift stuff onto the mainland, well, the infrastructure's just not there. He said he thinks the beneficiary out of all of this will be New York. He thinks that what will happen is if big banks are going to relocate or take some of the manpower away from the UK in a Brexit scenario, it may get relocated back to New York. So anyway, that was one angle over the weekend. The other thing they talked a lot about was Europe and the European banking system. And so this is perhaps what's happening with Deutsche Bank shares this morning. You've also got Commerzbank down 2%. You've got RBS under a bit of pressure. So certainly the big takeaway from this conference, at least from the US bank CEO's comments, was that European banks are in a bit of trouble. And they're very concerned about European banks, with Deutsche, of course, on top of that list. So perhaps this is why you're seeing a little bit of Deutsche downside. If we just switch back and have a quick check-in on the DAX, which was flirting with the low. Okay, we've had a little bit of a bounce off that Friday low for now. So we will keep an eye on that. So other stuff that's happening, we've had some comments on the oil front. This is a daily chart for crude. We had a pretty spectacular week. Last couple of weeks, really, launching from $43 back up to 50, and we got above 50 on Thursday and on Friday. It was such a key top from middle of August, but it looks like for now it could be a false breakout. What we've had is we've got a meeting, an informal meeting between OPEC members this week. It's happening right now, but actually Iran and Iraq didn't bother turning up, which of course immediately kind of undermines the credibility, or certainly means there's not really going to be further progress made on thrashing out the detail behind this production cut that they agreed on a couple of weeks ago. So also you've had some comments from Russia saying that they're pretty skeptical, basically, that OPEC are going to be able to cut production. Now, the official OPEC meeting isn't until November. It's pretty strange to have two sort of unofficial or informal meetings so close together, given that we had one a couple of weeks back, of course. But so it looks like we're not going to get much progress in terms of us finding out more about this production cut. What I want to find out, they've said, yeah, we're going to cut production basically to 32.5 million barrels, but of course that's fine. But who's going to cut? Which OPEC members are actually going to cut production in order for OPEC as a total to get their total production down? And this is where you're going to find the political difficulties. So this is what we want to find out. We've had comments from Saudi's energy minister this morning saying that they're going to meet Russia. He's going to meet the Russian energy minister in the next couple of days. He said that a Saudi-Russia oil committee are set to meet within a couple of weeks. We've had Iran's we've had Iranian output, so current crude oil output from one of the Iranian producers is 3 million barrels a day, and they're now targeting a 500,000 barrel a day hike in production. This is according to the managing director of that oil producing company, which of course makes a bit of a mockery of this OPEC production cut, when here's the managing director of an Iranian oil producer saying that they're targeting an increase of 500,000 barrels. So, straight away you're getting the credibility of this deal undermined. One final comment from the oil minister from Saudi. He said he's optimistic of getting non-OPEC participation in OPEC output freeze by the November the 30th meeting. So that's what this Russian meeting is going to be all about. Over the next couple of days and maybe over the next few weeks, look out for a Saudi-Russian meeting and any kind of signal that Russia are keen to get involved in this kind of output freeze, all right? But for now, oil's under pressure. Overnight, if we just zoom in a bit on the oil chart, on a 1 hour time frame, you can see we gave quite a lot of this back on Friday afternoon, and then we went again overnight and we traded down to test the $49 handle. We bounced a little bit here, but oil under pressure, pulling away from $50 as you get these comments come down the wires undermining this deal that got us up to $50 over the last couple of weeks. So that's the crude update. Now let's have a look at this week. Well, before we do that, let's just have a quick review of payrolls. I haven't even mentioned it. Here's the payrolls chart. In the end, obviously, the number came in slightly below expectation, and the revision to the previous 2 months was very marginally lower, 7,000 downward revision. But in the end, this is like just about fine. In terms of market price action off this, it was pretty subdued in the end. You're always going to get shoppiness, obviously. You're always going to get volatility, but in the end, we had. Well, I think the S&P is perhaps the best chart to look at here. I'll show you that in a second. But just on the chart of payrolls, it's been a really volatile year. We're not used to this in recent times. If you look at 2013 and 2014, payrolls growth was incredibly consistent, always averaging up above 200,000. This year it's kind of been all over the place. We've had shockingly bad numbers and then really, really strong numbers. The last two are kind of sum things up in that's about the annual average. So the average for this year, we've had 9 readings now, is about 160,000 roughly, which is certainly quite a big step lower from the year before, and definitely a step lower from 2014, where we had the best year since 1998, I think it was. So, the number on Friday was fine. It means, of course, the Fed aren't going to hike rates in November, but we knew that anyway, given the election risk. But probabilities for a December hike remained pretty much unchanged on Friday, and they remain at 64%. If we just have a quick look at the S&P chart, that's my top right chart, this sums it up absolutely perfectly. Equities rallied to start with off the data, because it was, you could say it's that Goldilocks point where the numbers are just about good enough to tell you that the labour market's still solid, but the data's not too good that it forces the Fed to hike. So this is really why the S&P rallied to start with, and we did break, we got propelled a little bit higher than we probably would have done, mainly as a result of the break of the 5th of October high at 21.58. But then that really just exhausted the upside, and then we spent the rest of the afternoon moving lower, and when we got to the cash open, we actually went and made new lows, and then we broke quite sharply lower, and quite incredibly then made a new low, not for the week, because we were lower than that earlier on the 4th, but We almost made a new high and a new low for the week off that data. And where did we finish by the time we got to the close on Friday? Pretty much back where we started. The S&P behavior of payrolls pretty much sums it all up. It doesn't tell us anything new. And you can see that where we're trading right now, 2150, bang in the middle of this range over the last week. Okay, so just be aware of that. We're fairly directionless here. I'd take your lead from Deutsche Bank share prices right now. That would be my feel. Given that it's a US bank holiday, given that Trump just about has kept himself alive. If Trump had had a shocker in that debate last night, then ultimately, Hillary would have been a shoo-in for the president, which means you perhaps would have got a decent bit of upside on perhaps equities this morning. And so I think Trump's still alive has just capped that, and we're kind of back to focusing on Deutsche. Let's have a look at the week ahead in terms of data. And indeed, let's just have a look at, firstly, today. So it is a US bank holiday. And unfortunately, we haven't got any European data either of any note. It's really quiet here on the data front. In fact, nothing even worth mentioning, literally. Even the auctions aren't particularly interesting. They're all short-term, although the UK are trying to sell some 3 to 7 year gilts. But, very, very quiet on the scheduled news flow today. Bear that in mind. In terms of the week as a whole, check it out, because one thing of interest that's happening this week is it's the beginning of the earnings season. So this is quarter 3 US earnings, where we're going to get corporate America reveal how they got on in the months of July, August and September. It kind of officially kicks off tomorrow night when we get Alcoa, the world's biggest aluminium producer, delivering their earnings. But really, the most interesting, it'll really start to get going properly, you would say, on Friday, when we get 3 of the big banks reporting, JP Morgan, Citigroup, and I think Wells Fargo is on Friday. But really, I would say it's kind of next week when we start to get into the thick of it. If you are interested in keeping up to date with who's delivering their earnings and when, you can go to this URL, bloomberg.com, and then /markets/earnings-calendar, or just Google Bloomberg earnings calendar, and you can then just have a look at each day. So for example, tomorrow, if I select tomorrow, you can see Alcoa. Now there are a whole load of companies reporting tomorrow. It's just that none of them are big. We all were really interested in. We don't own any of these shares. Sure, if you owned Performance Sports Group Limited shares, well, obviously their earnings are important for you. If you don't, then really what you're looking for is guidance from the big guns. You want the kind of top 20 S&P 500 companies, or let's say the Dow Jones 30 companies. How are their earnings performing? That gives us, even though this is micro news, it's the big giant companies that almost give us a bit of a kind of micro, if that makes any sense. But Alcoa are the biggest company tomorrow. But if I just flicked to Friday, you have to scroll down. There's so many companies reporting. But look, here's JP Morgan, for example. Citigroup as well. So they're the kind of big guns this week. But this is where you can keep an up to date on who's reporting earnings and when. Okay, we've had a particularly bad time of it on corporate earnings. The last 3 quarters we've had we've had earnings declines. A lot of that is because of the energy sector, of course, but it's certainly not been good conditions for corporate America. And really what we want to see is, have we bottomed on that? Has the earnings recession bottomed or not? So that'll be starting tomorrow, and there'll be an interesting feature over the next. Earnings season takes 3 or 4 weeks. All right, so into the end of October, we're going to have the run-in of the US election. We're going to have earnings season gathering momentum. We'll be also, of course, moving towards the Fed meeting on the 2nd of November, payrolls on the 4th, and the elections on the 8th. So let's kind of leave it at that for now. Just keep your patience today. It's quite dangerous today, I think, in that we got this US bank holiday. It's the Monday after non-farm payrolls. I'd say if you're not careful, it's quite easy to ruin your week today at the start. I'd say it's quite difficult, if not potentially impossible, to actually make your whole week today. So I'd be on the defensive if I were you. You've got to be quite, you've got to be quite savvy about this. Keep your powder dry. Obviously, take chances when they come. And I would say keep your eye on the DAX and the Deutsche situation to see if Deutsche's shares are going to continue to favour the downside or not. And that might give us a lead on whether the DAX is going to break back below 10,400. All right. Okay, that's it from me for now, guys. Enjoy your session. Thanks a lot.